All right, I want to bring these two worlds together.
Yep.
So there's the Bitcoin crypto world, and then there's the legacy issues that you described. You've been pounding the table about bonds and everything for a while. I've been pounding the table that every public pension in the United States should have 1% exposure to Bitcoin as a hedge.
Depends on your age.
Okay. Explain why age.
Because the expected future return and the risk profile don't match for a 65-year-old baby boomer. Mm-hmm. Because they have to divest of assets, they need to own bonds, and they need to just understand that they've got what they've got. Don't speculate.
Now, here's my argument or counter to that is they're not going to own 100% bonds, right? Because that's just the way that the investment mandates are of the pensions, et cetera. And so instead, what they can do is they can put 1% allocation to a non-correlated asset where the value drivers are different.
I get the theory why. Mm-hmm. I just don't think it is...
If you're the 65-year-old, what would
I don't think the risk
be?
Profile of the asset is right for a 65-year-old, because the risk profile of Bitcoin is the volatility of the asset. So they could probably take another asset with a potential future expected return that is maybe better. I would take, let's say, VC, because you can invest in this space, and I think you'll have a better expected return for those kind of people versus the volatility. Right? The younger you are, the more volatile you want the asset to be.
But isn't the illiquidity of VC not a good fit for a 65-year-old as well?
Yeah. I mean, there's no right answer. Yeah. And look, as you know, I'm a huge fan of Bitcoin, so it's not the issue of it being a fan. I'm just a bit worried about giving it to my mum.
Even at 1%.
Yeah, but it doesn't really matter enough.
Yeah.
And not in the world we're coming in. But the real point is anybody who has 10, 20 years or less or more of working and saving life, and I've gone on about this a lot at Real Vision, is the answer to younger people's future pension is part of this, is you have to have, and okay, now is the time to take risk when you're 30.
Yep. What do you think that allocation number is? Is it 1%? Is it something else?
No, much larger.
Much larger.
Yeah.
50?
No.
You thought about 50 for a second.
No, I think
Kevin O'Leary yelled at me on CNBC, and he forbid me from 50% because he said that's the stupidest thing he's ever heard. And then I had to ask him how much of his portfolio was in equities.
Yeah.
What do you think the number is?
I think realistically, if I think of the future expected return of it, let's say, and again, we don't know, but call the price $1 million, right? Which is the paper I wrote back in 2012. So where is it today? Struggling around 8.5.
8,500, yeah.
Yeah. Okay, so that's a pretty good risk reward, right? It's already been the highest performing asset of all time that I've ever seen, that's I think ever recorded, not 100% verified. So that expected return on a 10% allocation is simply life-changing for anybody.
It's basically a 1x downside, 115x.
Well, it's not a 1x downside, right? It's probably, well, okay.
Well, it just if it went
enough.
To absolute zero.
Yeah, but right, even the chance of that
is very low.
But maybe it goes down 90%. Okay, so we'll call it zero, just to make the maths easy.
Yep. So basically, you could lose all the money you put in.
You could lose 8,500.
100x plus upside.
And you could lose 8,500 and make 990 million. Sorry, 990,000. Yeah. So that's if it goes up to $1 million from its current price.
Which, do you think that is something that is realistic? What would you put? Like, how would you handicap that? Let's say $1 million price point. At this point, given where we are today and kind of how this has played out.
Well, look, in a portfolio, it doesn't matter. What it has is a high expected risk return. I think it could be worth much more than that. And in 20 years' time, we're talking about sats and not about Bitcoin, because that's just how we work. And actually, the divisibility of it actually works pretty well. It's just changed our headset about using decimals all the time. But that's how it will be. So it doesn't really matter what the price is, but you've got at least for an asset a 10x expected return at least. Over what time period? Well, even most price projections would be, you probably do it in 10 years. So, 10x over 10 years. I mean, that's astonishing for almost any asset price, any asset class I've ever come across. But it has a chance of a bigger upside. So that's just how I think about it. I also think, my personal point of view is that everything that we know about investing is going to change in whether millennials will be doing it, but the Gen Z will, is, I think the idea of a corporation goes, and different parts of because a corporation is treated as a single legal entity, as a corporate, as a person. The point being is that is now old-fashioned once you've invented tokens, because I can tokenize Exxon into maybe 5,000 different income streams, asset prices, all of this, so I can own any part of Exxon that I want. What an extraordinary difference. So you don't need to have corporations, the complex legal structures, but you can have different types of tokenization of this. I think the biggest change I think is going to happen is for financial markets is everything's going to be tokenized.
Yeah.
And to understand tokenization and the outcomes, everyone's going to have to basically, it's all going to be option theory and arbitrage. And what we're going to be finding is we're going to be creating baskets of tokens, and we're going to be looking at value baskets. And I was talking to Mark Yusko about this a few weeks ago, saying, listen, the value versus growth and all this, you're going to be doing all of that in tokens.
Yeah.
Right now, everyone's discounted half these tokens. They call them shit coins. Anybody who's an investor should be saying there is diamonds amongst all of that.
Yeah, so I think this is a really important point. 99% of them are the shit coins, right? Because basically what you end up getting is, like, in the tokenization world, so taking real assets and tokenize them, for example, the first people through the door are the ones who, they can't find buyers in the traditional world. They're not really sexy, or they're sexy assets from a visual standpoint, but the economics don't really make sense, etc. They're too high priced. There's all these issues, right? And so the first ones are always the ones that aren't the most attractive, and definitely won't be the types of assets in the steady state. What I think people have to understand is you can't judge the movement to tokenization, the kind of whole industry, on the first couple, because if you do that, what you'll end up doing is you'll look at those deals or assets, you'll write off saying these are bad deals, these are bad assets, or they're not attractive assets for my portfolio.
I just don't think anybody is going through every single token and doing the work and going to see companies and say, right, what is the asset? How does it work? What is your future expected returns? What is the feature of this? Nobody's doing that. Nobody's doing basic portfolio on tokens, and that is going to be a revolution, because that is coming. And that's what I'm saying is, within all of this, as you say, there's a bunch of terrible ones. There's ones that may have a bet that is worth taking, and there's others that are the wrong price. But there's too many tokens, because people don't realize people are anchored on tokens or currencies. They're not. They're like a replacement to equities. What you're building is a new equity market from scratch, but based on tokens. So the S&P 500 will be
a basket of
Coinbase 500 token. It's a different world, and they're not like equities because they have all the embedded components you want in it. They can be a convertible, they can be a bond, they can be an income stream, they can be an asset, they can be a debt, they can be. We have no idea. That is the flexibility and the incredibleness of what is coming. So I don't think the existing financial system really exists, because I don't think it needs to. I think it can change.
What is, I don't know if you're comfortable saying, what's your percentage breakdown of the portfolio of cash, bonds, gold, and Bitcoin?
I've always been a very cash heavy guy, because I'm actually quite risk averse, because you take risk in your career, so you don't take risk in your personal life. So I've been very debt averse always. And so, and Bitcoin, I've never had a massive allocation.
Over, under 10%?
Under.
Okay.
Under.
Gold? Under 10?
Yeah, just because it's not very racy.
Yep.
Bitcoin, I'll probably do more, because I was quite early, so I didn't really know, and then it came out and then got back in again, and I'll probably do some more, so I'm just kind of eyeing it at the moment. Bonds, I'll use leverage. Okay. So because I'm using them as a speculative trade. Yep. And also I'll go in and out of that.
Got it.
And dollars, I mean, this is how my head works. In 2012, 11, 12 maybe, 13, I was living in Spain, in the Mediterranean coast. I was billing global macro investor in euros. I was living in euros. My entire life savings were in euros. And I woke up and said, the dollar's going up. And at 148.5 against the euro, I switched my billing, all my personal savings. I then flew over to the US, and I ended up buying a place in Miami and the place I did in Cayman to stop myself from trading, to keep it in dollar assets. And I still have that position today.
You sound like me in Bitcoin.
Well, yeah. I mean, I knew it was the one trade, and bonds have been basically that one trade. I mean, every pension I had, I just turned the whole lot to bonds years ago and just left it that way.
You're one of the few people I know that you were very, very bullish on Bitcoin. At one point, you not lost some of the bullishness, but basically said, I don't know, and then went back to being bullish. Walk us through just kind of mentally like that journey. And
yeah, I mean, the journey is very simple to me. Look, and everybody has to admit it, is you don't understand what this thing is. We all think we understand. We have no real clue what this thing is. So when the fork started happening, I'm like, I don't know what this means. And nobody did.
Agreed.
We didn't know. The outcome was the outcome, but we didn't know. And I said, look, I don't understand this, so I'm out. And I would have done the same had I seen the same situation every time again. I would have said, I don't understand this. Looks to me like you're diluting a currency by creating identical currencies. Now, what was amazing is the adoption didn't happen. So
it was almost like the market was offered the ability to accept the dilution or not, and the market rejected it and actually became stronger entrenched in the original currency.
Yeah. Amazing. But yes, it did give birth to some other stuff like Bitcoin Cash and stuff that's out there, and interesting different use cases. But really, all of that forking didn't change. I mean, everyone just said, we don't care about the flaws of Bitcoin, we'll just work on that, and we'll work to get around the flaws, hence the Lightning Network and all of that. So that was that. And that was, I don't know, 2016, 17? 17, probably.
17, yeah.
17, yeah. It was just before the price spike. I got out at 2,500 or something. And I bought it at 200, so it was fine.
Not bad.
And then I walked away. And then macro happened. From 2017, I could see what was going on. So I was very focused on that, bonds and stuff like that, currencies. And it was Dan Tapiero who kept pestering me.
He has gone from, I think, not interested at all to absolutely a fucking animal on Twitter, pushing the narrative.
I know. So Dan said we need to talk about this. I'm like, look, Dan, I'm too busy with all of this macro stuff. And Dan's a macro guy, right? So I really respect him, and we know each other well. And he's a great macro thinker. And so I said, look, we'll just do it on camera. We'll just do it on Real Vision. I said, that's the easiest way, because I'm going to do that crypto week before the gold Bitcoin week. So I said, I'll do it then. Because look, I'd had a conversation with Barry Silbert that had got me very interested more in digitalization of stuff. Stuff online and how digital stuff can have value, and I'm starting to think about the broader world again, because I've always been thinking about it. It's not like I walked away from the whole concept. I walked away from Bitcoin for a bit because I didn't understand where it was, but the whole broader digitalization world was moving forwards in my narrative. Good conversations with Novo got me there. So then I sat down with Dan, and I just basically saw that the easiest way to play this big story was basically Bitcoin. And so that was it. I just got back in again.
Yeah. What do you think about like decentralized finance, Ethereum, kind of the whole programmable money?
Yeah, I love it all. I just think it's a different thing. I think Ethereum is silver to gold's Bitcoin. Because Ethereum has somewhat of a precious, commodity element, but much more of a industrial use element. So it's like silver. So I'm very bullish on Ethereum. I think it got overly beat up because literally everybody I know is building on Ethereum. And again, that will morph and change, and different places will get different stuff. And but so yeah, I'm extremely bullish on that.
Before we get into what's going on with Real Vision, presidential election, does it matter who the president is for where we're going in the finance world?
I'm a fan of neatness, and for the neatness of one of the narratives that I've followed, which is The Fourth Turning by Neil Howe, I think it should have gone far left. because the far left were most likely to break the system and change it. But no, change it. Like break corporatism, break how the healthcare system works, break how the financial system works. Right within that if you break the system, then you're creating the seeds of opportunity for all of the things that we think can come.
It's the innovator's dilemma, right? You have to disrupt yourself in order to actually keep going.
And so I don't think the current right of Trump is doing that. He'll disrupt some of the world trade systems, but the actual disruption of the system itself is not going to come out of him. So if I believe in that fourth turning narrative, somebody has to break it. And
now, when you talk about breaking it, is this the like anti-capitalism type left
it doesn't
narrative?
have to be. It doesn't have to be anti-capitalism. It's anti-kleptocracy and oligarchy.
Okay.
Right. It's how drug prices in America are literally 20 times that of Spain.
Yeah.
It is fucking madness. Right. It's illegal. It's price gouging, and it's wrong. It's how. It's the monopolistic power, the banking system, the pension system, how they can have laws change in the pension system to make sure it works for the big financial services firms or the pension, the asset management industry. That's wrong. There's people's money. It's wrong. It's wrong. The oil companies and what they get away with and what they should do and don't do. There's a number of different things that I think people would be pleased to see the back of, because everyone feels like we're being disadvantaged, and it's not capitalism. I think Elizabeth Warren's point is well taken. It's nothing to do with not wanting capitalism. What I don't want is a system that gives an inherent advantage to another person.
Got it.